Welcome to the deep dive. Today we're tackling something interesting, digging through corporate filings to find, the real story. We're zeroing in on a major player in India's industrial scene, National Aluminium Company Ltd, NLLCO.
Yeah, and NLCO isn't just any company. It's a Navratna CPSC, a central public sector enterprise. That status gives it a lot of autonomy financially and operationally. Think of it as a strategic national asset.
Oh, yeah.
And structurally, it's fascinating. It's fully integrated. Bauxite, alumina, aluminium, power, even coal. They literally control the whole chain, from digging stuff up to selling the final metal.
Right, the whole value chain.
Yeah.
And the documents we're looking at today, their recent disclosures, they're really talking up their performance. NLLCO's headline is Best Ever Q2 and H1 Physical and Financial Performance in FY 2025-26.
Bold claim.
Exactly. So our mission is to get behind that headline. What actually led to this? What are the real numbers, the strategic moves, and what does it mean long-term for NLCO and maybe the wider aluminum market?
Well, looking through this, there's sort of a dual story emerging. You've got these really impressive financial results, sure, but underpinning all that, massive, historically high production and sales figures.
Oh, okay. So money first, then how they made it.
Exactly. Let's look at the financials first, then the operational engine behind them. All right, let's dive into the numbers then. For the second quarter, that's July to September 2025, the net profit figure really stands out. Ours 1,433 crore. That sounds big, but what does it tell us about their current momentum? It tells us the momentum is strong, very strong. That 1,433 crore figure. It's a 35% jump compared to the same period last year.
35%?
Yeah, last year it was ours 1,062 crore. For a public sector company in a tough global commodities market, growing net profit by 35% in one quarter. That's really robust. It suggests their cost-cutting and efficiency efforts are paying off, right now.
And it wasn't just profit. The top line, their total income from operations in Q2, that grew too.
It did. Came in at ours 4,292 crore. That's a solid 7.2% growth year over year. But, Q2 is good, but the first half of the financial year, that's where you see this, explosive acceleration.
Okay, tell me about H1.
So the first half net profit absolutely soared. It hit ours is 2,497 crore. Now think about the previous year's first half. That was RS 1,663 crore.
Okay.
So that's a massive 50.15% growth, over half. A 50% profit jump in 6 months for a company this size, a Navratna. It means those efficiency gains aren't just tweaking things, they're fundamentally changing the company's financial picture.
And usually when a public company shows this kind of financial muscle, they reward shareholders, right, to kind of boost confidence.
They did exactly that. Almost immediately, they announced a pretty significant interim dividend. It was Rs4 per equity share.
Rs4 per share.
Yeah.
What does that translate to in terms of payout percentage?
That works out to 80% on the face value, which is Rs5 per share. It definitely signals they're in a strong cash position.
The total amount going out.
Rs 734.65 crore for this financial year, 2025-26. And they gave clear dates too, which is always good for investors. Record date was November 14th, 2025, and payment promised by December 6th, 2025.
Right. Timely payment signals liquidity confidence. Okay.
Well, absolutely. But like I said, we can't just look at the money. That 50% profit surge didn't come out of thin air. It happened because they were literally digging more, processing more, and smelting more metal than ever before.
Ah, right. The physical performance.
Yes. Let's shift gears to operations, because that's where you see how they achieve those financial numbers.
Okay, so let's talk scale. What actual production records did NLCO break in that first half?
Well, they hit highest ever production for their main outputs. Alumina hydrate production reached 1,153,000 metric tons.
Wow, over 1.1 million tons.
Yeah, and aluminium cast metal production hit 234,148 metric tons. That alumina hydrate number, the 1.15 million tons, that's the crucial stuff they need for their own smelters and also to sell on the global chemical market. It's a huge volume.
Okay, so production was way up. How did that translate into actual sales? Because producing is one thing, selling is another, right? It shows demand.
Yeah.
And the sales figures are, I think, the most revealing part about where they stand right now. In H1, NALCO sold more alumina than ever before, 699,913 metric tons, highest ever alumina sales.
But here's the really interesting bit, the context. That sales figure, it actually broke their previous all-time record. which was set way back in the financial year 2013-14.
Wait, 2013-14? That's like over a decade ago.
Exactly. Took them 10 years to surpass that record.
So what does that suggest? Were they stuck for a decade due to capacity issues or market conditions, or what changed so dramatically this year?
Well, the sources seem to point to a couple of things. First, internally, this real focus on efficiency, squeezing every bit of output from their existing setup.
Okay.
And second, externally, the market signals. Demand picked up, prices got better. It was like the perfect storm, but in a good way. The market was finally ready to absorb all that extra volume at prices that made sense.
And domestically.
Domestically, too. Highest ever cumulative metal sales in H1, 225,675 metric tons. It really shows that Indian demand for aluminium is strong and probably structural.
And looking at the inputs required for all this, the Q2 data shows they were ramping everything up. Bauxite production was up 13% compared to last year.
Yep, hit 1,780,000 tons. And crucially, power generation aluminium is incredibly power hungry. Their thermal power generation was up 9% in Q2, reaching 1,744 million units.
That's efficiency in action, isn't it? Coordinating all those inputs.
Right. You just can't get 50% profit growth without optimizing everything. And the company itself says this. Their leadership credited enhanced operational efficiencies and cost optimization internally. They seem to be mastering the complexity of running this huge integrated operation at peak performance.
Okay, so internal discipline was key. But commodities always depend on external factors, too. What were the global market conditions they mentioned?
They pointed to a recovery in aluminium prices internationally, specifically mentioning the LME, the London Metal Exchange.
Ah, the benchmark.
Yeah. And also steady growth in demand right here in India, especially from infrastructure projects and the automotive sector.
And their outlook seems positive, too. Their presentation mentioned strong LME prices recently, right? Like $2,786 per ton in October.
That's right. And looking ahead, they project prices for the whole of calendar year 2026 to stay pretty healthy, averaging around $2,670 per metric ton. So they're not expecting a sudden crash. They seem to think this strength will last.
Interesting. And what global factors are supporting that outlook?
Well, they mentioned a few big ones, things like potential Chinese stimulus, supply disruptions elsewhere, like at smelters in Mosul or San Ciprian. But one connection they made was particularly fascinating.
Whoa, what was that?
The link between the U.S.-China tech tensions, specifically the chip war, artificial intelligence, and aluminium.
Okay, connect those dots for me. High-tech AI and basic metal.
Well, think about it. AI needs massive amounts of power. Data centers, supercomputers, they're incredibly energy intensive and getting more so.
Right. Huge electricity bills.
Exactly. And that means you need more power lines, bigger grids, stronger electrical infrastructure to handle it all. Aluminium is absolutely essential for that, especially in transmission cables. So the race for AI dominance, driven partly by geopolitics, is indirectly boosting demand for NALCO's core product.
That's a great point. Macro trends hitting the commodity market. But beyond the global scene, you mentioned the domestic market provides stability for NALCO.
It really does. That's their bedrock. Aluminium consumption in India has been growing at a compound annual growth rate, a TAGR, of around 9% over the last 5 years. That's really fast, sustained growth.
9% CAGR.
Yeah.
And it's expected to continue.
Yeah, the projections show Indian demand continuing to grow somewhere in the range of 6.3 to 7.2% CAGR all the way out to 2030.
And where is all this metal going within India? It's tied to basic growth, isn't it?
Absolutely. Look at the breakdown. The electrical sector uses the most, about 48%. Then you've got transportation and auto at 15%, and building and construction at 13%, so foundational industries. Exactly. As India grows, NALCO benefits. This strong domestic base acts as a buffer against some of the volatility you see in global markets.
Okay, so with this strong financial position, great performance, and positive outlook, it makes sense they'd be pushing forward with big expansion plans.
Definitely.
And they're in a unique position to do it because of something crucial. They have zero debt. Zero debt for a company that size in heavy industry.
It's almost unheard of, especially globally. Aluminium production is super capital intensive. Being debt-free gives them incredible strength and flexibility to fund these huge long-term projects without relying on borrowing heavily.
So let's look at those plans. What are the key projects coming up?
Well, some are pretty near term. The Patangi bauxite mine's adding 3.5 million tons per annum capacity that's expected to be commissioned around May 2026.
Okay, next year.
Yeah. And right after that, June 2026, they expect their fifth stream alumina refinery to come online, adding another 1 million tons per annum capacity. So immediate boost to their output potential.
But they're looking much further out too, aren't they? These timelines really show that long-term CPSE planning horizon.
They certainly do. The really big ones are further out. Expanding the aluminium smelter, adding another 500,000 tons per annum that's projected for December 2030.
It's 2030, okay.
And boosting their own power supply is key too. They're planning a big captive power plant expansion, adding over 1,000 megawatts, 1,080 milliW, to be precise, slated for June 2031. These are generational investments.
Wow. And beyond just the scale, the sources also talk about NLLCO's resilience, like controlling their own raw materials, bauxite, coal, caustic soda. That insulates them from supply chain issues, which is huge right now.
Absolutely huge. And alongside all this industrial might, they're also highlighting their sustainability efforts. They've got 198 megawatts of existing wind power capacity already, which generated a fair bit of energy last year. And they've got another 15 milliW planned. Plus, they talk about greener mining and 98% blast-free mining, 5-star ratings for their mines.
And they seem active on the social responsibility front, too, mentioning programs like NLO Kiladli for girl students and Indradhanush sponsoring other students. It really paints a picture of a company just firing on all cylinders. Profit, growth, strategy, sustainability, CSR.
That is definitely the main narrative. But you know how it is with these deep dives? Sometimes the most interesting detail is buried a bit deeper.
Ah, okay. What did you find?
Well, deep in the statutory auditor reports, there's a note 6 to the financial results that adds a little friction to this perfect picture. And it relates directly to that sustainability angle, their wind power.
Okay, what's the issue?
It's a significant operational, wrinkle. It turns out NLCO hasn't recognized any revenue from 2 of its wind power plants in Rajasthan since April 1st, 2019.
Wait, since 2019, that's 6 years ago. They haven't booked revenue from operational wind farms for 6 years.
That's what the auditor's note says. 6 years of generated green energy revenue essentially stuck in accounting limbo.
Why? What's holding it up?
It's because they haven't been able to finalize a new power purchase agreement, a PPA, with the state government there in Rajasthan.
So the contract lapsed or needs renewal and it's just stuck.
Exactly. They're generating the power, it's going into the grid. But because the PPA isn't signed, the note says the matter is sub judice, meaning it's before the High Court of Rajasthan. They can't actually book the income from those sales.
Huh. So they're doing the green energy thing, building capacity, generating power.
Yeah.
But a legal contractual issue going back 6 years is preventing them from realizing the financial benefit.
Precisely. It creates this gap between their operational reality making green power and their reported financial results for that specific segment.
That raises some serious questions, doesn't it? Even for a huge, influential Navratna CPSE.
Yeah.
Getting state-level agreements for renewables can be that difficult.
It seems so. And while this unrecognized revenue might be small compared to their massive aluminium profits, it's not insignificant when you're talking about balance sheet health and, frankly, the financial reality of their green transition efforts.
Okay, so let's recap this deep dive. We've definitely seen NLCO hitting some incredible highs. That 50% profit growth in the first half is remarkable.
Yeah, driven by operational records, some of which broke decade-old benchmarks.
They're standing on a really solid financial base, zero debt, which is key. And that's letting them launch these huge long-term expansion plans stretching out to 2031 and beyond.
It really points to a company that's turned things around significantly, benefiting from both internal discipline and some helpful external factors, including that interesting link to AI's energy needs.
But, as we discovered, even with all this success, their sustainability push, specifically the wind power expansion, has hit this major snag. That significant chunk of wind power revenue unrecognized since 2019 because of the stalled PPA.
Yeah. And that leaves us with a final thought for you, the listener, to sort of mull over.
Okay, what is it? Well, think about this. In a world that's increasingly pushing for ESG, for greener manufacturing, NLCO is trying to lead by example with significant renewable capacity. But if a giant state-owned zero-debt company like NLCO can't get a power purchase agreement finalized for 6 years, preventing them from even booking the revenue from clean energy they're already generating, what does that really signal about the actual regulatory risks and maybe the true financial viability facing future green energy investments across India's core industries? Is the impressive strengths we see on the factory floor getting bottlenecked by delays in the courtroom or the state government office?
It's a critical question, especially for anyone watching the energy and infrastructure space in India.
A very pertinent question indeed. Thank you for joining us for this deep dive.